Number two, this is your traditional plays. You're going to hear this and think it's boring, but the fastest way to go broke is ignoring the boring stuff. Don't get caught up in the trends or trying to get wealthy overnight. One of the best ways to do it is still with a retirement account and being very basic. Now, I understand I run the risk of you calling me a boomer and this not working anymore. That's not true, and we're gonna go through this. Opening a Roth IRA. A Roth IRA, I think, is still a very good option because number one, all your gains are gonna be tax-free. And number two, you can invest out of a Roth in a lot of different investments that you can't do in a traditional or a 401k. You can still invest in real estate. You have options now to get into crypto. So a lot of the things that you would do with post-tax dollars are still at play with an IRA. Here's what it can look like. Let's say you invest $500 a month in a Roth IRA. So that's $6,000 a year. Over 30 years, you're going to put in $180,000 with an average 7% return. So I'm factoring in the historical of the S&P 500 plus inflation. You're going to see about $610,000 to $650,000 in that portfolio tax-free. Now, if you took it a step further and maxed it out, which is $7,000 a year, in that 30-year window, you're going to have a total contribution of $210,000. Your ending balance, though, has the opportunity to be $770,000, all tax-free. Now, whenever I tell people this, the pushback I get is $770,000 in 30 years is nothing. That's like 50 grand today. Yes, but you're looking at it wrong. You need to look at the money that you're putting in and what you're going to get on the back end. Putting $200,000 in to make $770,000 on the back end tax-free, that's massive. That's still very important. That's the same as you basically turning your 210 into, let's call it 1.4 million, because remember, you're not paying taxes on this.